Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A bullish engulfing pattern on Friday, and quite a large one, enough to be able to call it a bullish long white Mariposa as well. The market punched up and closed over the old neckline, currently at 70.40, of the late December 2021 to start of March 2022 head and shoulders top, as well as the lesser Fibonacci lines at 70.75 and 70.90, and even managed to pierce the March to June 50% Fibonacci line at 71.84, but failed to close over it. This all threatens the earlier break lower from the big March to early June ascending triangle. Primary target X for this pattern would be in the 66.58 area, and a secondary harder to get target, well, that would be in the 63.80 area. There is also a double top formation, even Eve type, formed from March to date. This had a primary target X2 in the 69.18 area, and it's a harder to get secondary target X3 in the 66.35 area. The primary target for the double top, target X2, was reached last Monday. Finally, there was the opportunity to look at the action over the last 4 weeks as a possible bear flag, stroke bearish halfway hesitation type move. For this, we have a possible target X4 in the 68.50 area. Well, this is going to be the first of the targets below to be retired, as the pattern would now not fit with the recent rise, and it will be retired after this commentary. Now, as we are in the last week of June, it's timely to point out that we are currently set up to make a possible monthly key reversal down. If we close on the 30th of June, either above 75.86 or below 75.13, then we'll be on. Right now, we're looking very much at a possible monthly key reversal down, in which case it will also be an immediate countering monthly key reversal down. So far today, we're at a higher open and continuing follow through higher to last Friday's large bullish engulfing pattern, punching up through the 50% Fibonacci line at 71.84, as well as the nearby 50% Fibonacci line for the July 21 to June 22 move at 7200, but barely able to sustain this move higher right now after just over this higher 50% Fibonacci line. German DAX futures. A bullish double on Friday, as after reaching down and achieving target X in the 12.825 area, the primary target for the March to June sideways triangle, the market seems to have had enough of the declines, especially coming so close to the slowly rising October 2020 to date uptrend, currently at 12.792. The move back up ran into resistance at the lesser Fibonacci line at 13.216 and closed on the other nearby lesser Fibonacci line at 13.115. Overhead, we now have the 2021 low at 13,300 and the February 21 low at 13,356. Then there's some fairly free territory overhead until the next congestion at 13,636. The recent move lower had allowed the market to reach the first of the sideways targets, sideways triangle targets on the downside. A secondary harder to get target X1 in the 11,210 area is still below and well off the bottom of my daily chart. There's also another possible pattern, is to regard the last 3 weeks action, much as we have seen in UK FTSE futures. It's a possible bear flag type pattern. If that is the case, and it's still a big if that is the case, then the downside target X2 would be in the 12,240 area. Finally, on top of all of this, we are entering the last week of June, and we're already set up for a monthly key reversal here. If we close either above 14,378 or below 14,090, then we'd be on. Right now, even with the moves higher, we are still looking very much like a monthly key reversal down. So far today, well, a lower open, but then a significant move higher up over the lesser Fibonacci lines at 13,216 and the 2021 low at 13,300, but getting stuck at the overhead February 2021 low at 13,356 right now. US E-mini S&P futures. A third bullish white soldier, in fact a bullish long white Mariposa on Friday, as the market continues to build on the excellent bullish inverted hammer pattern made the Friday before. Prices punched up and closed over the broken lower tie, currently 38.36, the January to March bearish shift pitchfork, as well as a slew of congestion levels. Prices finished over two ones that are close together, which is 39.11 and 39.02. Now, I'm in two minds on how to treat this broken Andrews pitchfork. On the one hand, it has really been broken and should be retired. But on the other hand, I'd highlighted the crossover of times from these two pitchforks, one on the 18th of May and the other on the 7th of June, as periods of one would expect, or one or more of the following. Well, volatility for starters, a change in trend, or a reinforcement of a trend. I'd highlighted these important time periods with red circles on my daily chart, and then it is these two crossovers that have been in the cause of the current market durations. Hence, it might be useful to know when the next crossover will happen. Now, for your information, next crossover, indeed the last crossover of these two patterns, should they not be usurped by some other patterns or action in the meantime, well, that would be on the 12th of August. There is one other pattern I'd like to draw your attention to, and that is the labeled late March and late April to date possible bearish halfway hesitations. I've detailed two separate patterns, as there is an argument as to where the pattern should start from, and that's assuming the pattern works in the first place. Therefore, target X for the pattern originated in April and is in the 35.55 area. Meanwhile, target X1 for the pattern originated in March and is in the 34.20 area. With the recent moves back up, I'm minded now to retire both of these after this commentary. However, please note, the bearish Andrews pitchfork still seems to overall be running the whole show right now. So far today, a dip down to the congestion support at 39.02 before a move back up and towards the next resistance, the February 2021 high at 39.59. Above this high, we have congestion at 39.89, then the 50% Fibonacci line of the October 20, January 22 move at 40.18, and then the May 2021 low at 40.29. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. Here comes the final bit.